A beginner's guide to the stock market. Hey everyone, welcome to our channel. Today we're diving into A Beginner's Guide to the Stock Market by Matthew R. Kratter. By the end of this video, you'll have the knowledge you need to start investing in the stock market confidently. Let's get started. Key point 1. Introduction to the stock market. So what exactly is the stock market? Think of it as a big marketplace where people buy and sell pieces of companies called shares. Example, imagine you own a pizza shop. If you wanted to raise money to expand, you could sell small pieces of your pizza shop to investors. Those pieces are shares. When you buy shares of a company like Apple or Google, you own a tiny part of that company. Why invest in stocks? Stocks have historically offered higher returns compared to other investments like savings accounts or bonds. This can help grow your wealth over time. Key point 2. Basics of stocks. Let's talk about the basics. When you buy a share, you're essentially buying a piece of ownership in a company. If the company does well, the value of your shares goes up. Dividends. Some companies share their profits with shareholders by paying dividends. For example, if you own shares in a company that pays $1 per share in dividends and you own 100 shares, you'll earn $100 in dividends. Key point 3. Getting started. To start investing, you need a brokerage account. This is like a bank account, but for buying and selling stocks. There are many online brokers to choose from, such as Robinhood, E*Trade, or TD Ameritrade. Do some research to find one that fits your needs. Stock exchanges. Stocks are traded on exchanges like the New York Stock Exchange, NYSE, or NASDAQ. These are the platforms where buyers and sellers come together to trade stocks. Key point 4. How to buy and sell stocks. When it comes to buying and selling stocks, you have a few options. Market orders. Buy or sell immediately at the current price. Example, if Apple is trading at $150 and you place a market order, you'll buy it at around $150. Limit orders. Set a specific price at which you want to buy or sell. Example, if you want to buy Apple at $145, you place a limit order. The order will only execute if the price drops to $145. Stop orders. Buy or sell when the stock reaches a certain price. Example, if you own Apple at $150 and want to sell if it drops to $140, you place a stop order at $140. Key point 5. Investment strategies. There are different strategies for investing in stocks. Long-term investing. Buy stocks and hold them for many years. Example, Warren Buffett is famous for this strategy. He buys good companies and holds them for decades. Day trading. Buy and sell stocks within the same day. This is risky and requires a lot of experience. Example, day traders might buy a stock at 10 a.m. and sell it at 2 p.m. for a quick profit. Swing trading. Hold stocks for a few days or weeks to capitalize on short-term trends. Example, if you notice a stock is on an upward trend, you might buy it and hold it for a week or two. Key point 6. Analyzing stocks. Analyzing stocks can help you make better investment decisions. Fundamental analysis. Look at a company's financial health, like revenue, profit, and debt. Example, if a company has growing revenue and low debt, it might be a good investment. Technical analysis. Use charts and patterns to predict stock movements. Example, if a stock has been rising steadily, technical analysts might predict it will continue to rise. Key point 7. Managing risks. Managing risk is crucial in investing. Diversification. Don't put all your money into one stock. Spread it across different stocks to reduce risk. Example, if you invest in tech, healthcare, and retail stocks, you're less likely to lose money if one sector performs poorly. Risk tolerance. Know how much risk you can handle. If losing money makes you anxious, consider safer investments. Key point 8. Common mistakes to avoid. Here are some common mistakes to avoid. Emotional trading. Don't make decisions based on emotions. Example, if a stock drops, don't panic and sell. Assess the situation rationally. Chasing trends. Do your own research instead of following the crowd. Example, just because everyone is buying a stock doesn't mean it's a good investment for you. Key point 9. Advanced topics. For those ready to dive deeper, here are some advanced topics. Options and futures. These are more complex financial instruments that can offer higher rewards, but come with higher risks. Example, options give you the right to buy or sell a stock at a specific price in the future. Short selling, betting that a stock's price will go down. This is risky and not recommended for beginners. Example, you borrow shares to sell them at the current price, hoping to buy them back cheaper later. Key point 10, building a portfolio. Building a solid portfolio is key to successful investing. Asset allocation. Divide your investments across different asset classes like stocks, bonds, and real estate. Example, you might invest 60% in stocks, 30% in bonds, and 10% in real estate. Rebalancing. Regularly adjust your portfolio to maintain your desired allocation. Example, if your stocks grow and become 70% of your portfolio, you might sell some stocks and buy more bonds to balance it out. Key point 11, staying informed. Stay informed about the market, financial news. Keep up with news and trends. Use sources like CNBC, Bloomberg, and financial websites. Example, if there's news about a new product from a company you invest in, it can affect the stock price. Education. Continuously learn and improve your investing skills. Example, read books, take courses, and watch videos like this one to stay sharp. Key point 12, final tips. Here are some final tips for successful investing. Patience. Investing requires patience and long-term thinking. Don't expect to get rich overnight. Example, it took Warren Buffett decades to build his wealth. Continuous improvement. Always seek to learn more and refine your strategies. Example, regularly review your investments and adjust your approach based on what you learn. Presenter standing with a thumbs up. And that's it. You now have a solid foundation to start investing in the stock market. Remember, the key is to start small, stay informed, and keep learning. If you found this video helpful, please give it a thumbs up and subscribe for more investing tips. Happy investing!